All right, what's going on, guys? Market review today. Coming in a little late, but we had a pretty nice sell-off today, so I want to make sure I get this up there posted. It's 1:23 in the morning, but nonetheless, we got to get better. So let's go. Nasdaq here on the daily chart. We traded up. This is a new week opening gap between Friday's close and Sunday's open. This is the gap you see here. Traded up into that, taking out yesterday's high, and also taking out yesterday's low. So pretty volatile day. Let's take a look at what happened on the lower time frame. Drop down to a 15-minute chart here. All right, so here is, I could zoom in a little more. That new week opening gap, trading into it there. We come down, midnight opening price. We take out the buy side, rally up, but notice how we don't trade above the midnight open. Okay, this is something straight out of, I believe it was the 2022 ICT mentorship. So if we see something like this where we fail to trade above the midnight open and we start to move away, that is significantly bearish. Okay, that means price is in a hurry and it's super heavy. It can't even get above the midnight open. Okay, on any other day, what do we like to see? Okay, we like to see buy side taken out, rally above the midnight open, and then start to work lower, right? The fact that we cleared the buy side above these highs here, relatively equal, clearing out the buy side, can't even get above the midnight open, and then we start to rotate lower, that's bearish, that's heaviness, okay? That tells us that the market is in a hurry for lower prices. Scroll down a bit. Okay, not much to really analyze here, just dropping. Fair value gap during lunch, 12 o'clock. Yesterday's low tagged after hours. Let's get a little bit more detail here on the 5-minute. All right, again, midnight opening price. We clear out the buy side above this high and above this high here. We rally up. Can't get above the midnight open. Price is too heavy to do so. We're in a hurry to go lower. Selling off. We have a breaker here. We'll look at that on the 1-minute time frame. There's a setup that forms there. Lower. Fair value gap during lunch. The body is respecting the high of that. Selling off. Small little fair value gap here. Take out the high. Break lower. Retrace. Take out these equal highs. We'll look at that. Final hour macro. Beautiful setup. Taking out yesterday's low. So I'll keep this up here for a moment. All right, here's your 1-minute chart, silver bullet hour, 10 o'clock to 11 o'clock. I took off the midnight opening price. Okay, remember it was just above the swing high. We just failed to reach it, but I have the 8:30 opening price. Okay, you could treat that as a premium discount as well. We rally up, come back down, enter that silver bullet hour, rally up again above the 8:30 open. Okay, that's a short-term premium. Zoom in real tight here, volume imbalance. The body stopping dead in its tracks there. Failing to take out this high. Break lower. Fair value gap. There. Break lower. Breaker. We talked about this in the live stream. We have a high, low, higher high. Last down close candle. Okay, we looked at the body. So your breaker would look like this. Okay, that's your bearish breaker. You can go short this candle here, and this candle here, this candle here, and this candle here is your last opportunity to go short inside of the breaker. Okay, if you didn't go short in the fair value gap. We also have a larger breaker here in this fractal. If we zoom out a little bit, high, low, higher high. Okay, same thing we have here. High, low, higher high. We have it on this larger scale here, but the logic is still the same. All right, take the breaker, draw it through. See the body's respecting mean threshold. If we put midpoint on, look at that. Perfect. Break lower. Okay, selling off all morning. Selling off. Fair value gap here. Bearish order block. Trading up into that. Selling off. We get to the lunch hour. If we're expecting a continuation during lunch, okay, we talk about this all the time. If we're still expecting lower prices, what do we want to see occur during lunch hour? Okay, 12 o'clock to 1:30. You want to see a short-term high or some sort of buy side taken out before going lower during that lunch hour. Equal highs here. This high here. These two candles here. This high here. We have like a triple top. We run that out. Buy side. Retrace. Come back up. Fail to take out this high. Break lower. Breakaway gap. The fact that we left this fair value gap open, that tells us that we're heavy. We're bearish. That's what you want to see. Fair value gap here. Fair value gap, bearish order block, high probability order block because it's coupled with a fair value gap. Rotating lower, crazy sell off today, beautiful. I don't trade Thursdays of NFP week, so I didn't take any of this. No FOMO. Okay, I don't feel any type of way about it. Work lower, come back during the PM silver bullet hour, clear this buy side just by a few ticks. We'll look at these equal highs here on the final hour macro, 315, 345. Okay. Break lower again, just working lower, working lower, working lower. We fall just short of yesterday's low. We retrace. Now, final hour macro. What's this function? What does it do? It attacks remaining liquidity that is still left on the table. All right, so if we're looking at this, who's been making money all day? Okay, what liquidity is still left on the table? Well, let's look at it. Who's been making money all day? People going short, right? Everybody went short today. Everybody's making money going short during lunch. Everybody's making money going short, going short, going short. Sell side here, taken, this low, taken, this low here, drop down, taken. So where's the liquidity at? These equal highs right here, flashing neon sign, way too clean, way too smooth. Okay, that is the liquidity that's left on the table for today's trading. The final hour macro, 315 to 345, will attack and run against liquidity that's still left, okay, on the table. We've already ran out a bunch of sell side. Okay, all these lows taken out, taken out, taken out, taken out. Long traders are not making money here. Short traders trailing their stop losses down. Okay, clean highs up here. We get to the final hour macro. Fair value gap, bullish order block. Fair value gap, down close candle, bullish order block. These 4 consecutive down close candles, that's one order block. Down close candle, these 2. Focusing on this last one here, that's a bullish order block. Remember, we're targeting liquidity still left on the table, which is the buy side above those equal highs. Bullish order block, our focus is still up here. Tagging out the buy side. Once we clear that liquidity, we retrace, taking out yesterday's low after market closes at 415. So that's it. That is today's market review. Apologize, I'm getting this one up a little late. Had some personal things to do with friends and family, but nonetheless, it's finished. So Friday, tomorrow, NFP week, I only look to take one trade. Rarely do I take 2 trades on Friday. I don't like to overdo it on the last trading day of the week. So that'll be fun. We'll see what NFP brings us, and we'll go in and look for a setup once the smoke clears. Paid members in the Discord, I'll see you in the live streams at 9:30. All right, peace.